Hello, everyone. We're going to give it a couple more minutes to let others trickle in. Hello, everyone. Thank you for joining us today. We are going to have a great webinar with Dave Weber, the Life Sales Director at Mutual of Omaha. As you have questions, please type them in the question box on your control panel at the bottom right-hand side of the screen. We will answer any questions at the end of the presentation. After the webinar, please give me a call if you'd like to receive a copy of today's webinar or to answer any additional questions you may have. Thanks again for joining us today. Dave, go ahead and take it away.
All right, thank you, Clayton. I appreciate it. Again, as Clayton said, my name is Dave Weber. I'm the Life Sales Director here at Mutual of Omaha, and we have Caitlin Harris on the line as well. Caitlin is our account executive. And today, I want to start with some good news today. For those of you who have been selling our Living Promise Final Expense product or any of our Simplified Issue products, you're probably familiar with the old email signature process that we have, both for the HIPAA authorization and for the final signature. It's kind of clunky. You have to go back and forth with the email with your clients. We've just recently, in the last couple of weeks, added what we call text signature. So now the insured is able to get a link through text and sign both the HIPAA authorization and the final signature through a text link. And that really cuts down on the number of back and forth that you have to do with your client. And it's great news in terms of making it easier to do business with Mutual of Omaha. So if you weren't aware of that, you are now, and it's going to be great for your future business with Mutual of Omaha. So today, I want to share some reasons why you might want to do business with Mutual of Omaha. And then I'm going to review our industry-leading final expense product, the Living Promise, and then also our top-selling product now, or our fastest-growing product, the Indexed Universal Life, and share some reasons why you might want to take a look at the Indexed Universal Life product. If you are selling final expense right now, whether it's with us or anybody else, you'll especially want to pay attention to the Indexed Universal Life Express discussion, because a lot of our agents are actually pivoting from our Living Promise Final Expense over to the Indexed Universal Life Express, simply because it has a higher death benefit and really adds more flexibility for the client. So a lot of our sales that used to be Final Expense are now moving over to Indexed Universal Life Express. So hopefully you pay attention for that part. And then after I review those products and share some product comparisons, then I want to talk about our 4 Quarters Club program, which is an agent cash incentive for doing business with Mutual of Omaha. And then we'll open it up for questions if anybody has any after that. So let's go ahead and get started. So why is it that you may want to do business with Mutual of Omaha? Well, number one is our brand recognition. We probably have the most recognizable brand name in the industry in the senior age market. If you're selling final expense or Medicare supplement, your clients have heard of Mutual of Omaha. And a lot of that is because of the old Mutual of Omaha program that we had back in the 60s and 70s, actually went off the air in the early 70s. So if you're younger, you may not have heard of it, but most of your clients have, I can assure you. And we've brought that program back to NBC on Saturday mornings at 9:30. It just started last week. And for the next several Saturdays throughout the fall and into the winter, that program, Mutual of Omaha's Wild Kingdom program, will be at 9:30 on NBC. So that's good news as well. The reason for that, that really helps you as an agent to really spend less time talking about the company and more time talking about the solutions and focusing on the solutions that your customers need in terms of life insurance. As far as financial stability, we've been in business for 114 years. We opened our doors in 1909. We are A+ rated by AM Best, A1 by Moody's, and A+ by S&P Global. Again, less reason for you to talk about the insurance carrier and more reason for you to focus on your customers' needs. We have dedicated teams both in sales and underwriting, and we've got one of the most competitive simplified issue product portfolios in the industry, and probably the most comprehensive simplified issue product portfolio in the industry as well. If you take a look here, these are all of our simplified issue products. Of course, the flagship product, our Living Promise, Final Expense. We've got both level and graded death benefits. Our Indexed Universal Life Express is our fastest growing simplified issue product, and I'll talk about that as well today. Issue ages up to age 75. We have our Term Life Express product, which is our original simplified issue product. Used to be called the Mortgage Term, but we sell a lot of that product as well. We've got the Children's Whole Life, which is a great product, ages 2 weeks to 17 years. The great thing about this product is grandparents can purchase this product on grandchildren without the parent's signature. So that's good, especially if you're in that senior age market. And then if your customer cannot qualify medically for any of our life insurance products, they can always get the Guaranteed Advantage accidental death product from ages 18 years to 70 years. And then we also have our Critical Advantage portfolio as well that can be issued all the way up to age 89. So we've got the full, probably the most robust portfolio of simplified issue products in the industry. Again, all of our simplified issue products, no blood, no paramed, no urine, yes to quick issue, and yes to getting paid faster. So let's start with the Living Promise Whole Life Final Expense product. We have two plan options, the level death benefit plan and the graded death benefit plan. The level plan goes to ages from age 45 to age 85. Base amounts $2,000 to $50,000. Now, if you're not aware, just 2 months ago, our maximum base amount was $40,000 on the level death benefit plan, and we raised that to $50,000. So just more options there for you to sell the Living Promise. Standard tobacco and non-tobacco rates on the level plan. And then the graded plan we issue up to age 80, base amount $2,000 to $20,000, and only the standard no tobacco distinction. If the insured dies of natural causes in the first 2 policy years, we will refund their premium plus 10% interest on the graded death benefit plan. We have cost riders and no cost riders. You can add the accidental death benefit rider at an additional cost. And we've included at no cost the accelerated death benefit riders for terminal illness and for nursing home confinement. So again, you've got the tax-free death benefit with the Living Promise, paid tax-free to the beneficiary. We also include the accelerated death benefit riders, the terminal death benefit rider. If the insured is expected to live no longer than 12 months, they can access up to 90% of their death benefit. Or if they're confined to a nursing home for 90 consecutive days or more, and they're expected to remain confined in that nursing home, they can access up to 80% of their death benefit. And then also, obviously, you can add the accidental death benefit at an additional charge. So we have a two-part application for the Living Promise product. Part one, if they answer yes to any of the questions on part one, it's an automatic decline. And if they answer yes to any of the questions on part two, they are still eligible for the graded death benefit. I want to point out on page 2 here, the diabetes question, actually we changed this to age 45. So if an insured is diagnosed with diabetes prior to age 45, they would have to answer yes to that question. But now, I mean, since we've changed that from age 50 to 45, now those that were diagnosed age 45, 46, 47, 48, 49 can still answer no to that question, and they can still qualify for the level death benefit plan. And also, if you take a look down here, question number 8C, used unlawful drugs in any form or abused or misused prescription drugs. If they've used marijuana in the past, you'd have to answer yes to that. But now we've added it in there with the exception of marijuana. So if they've used marijuana, they can now answer no to that question, and they can still qualify for the level death benefit plan. All right, so again, if they answer no to all application questions, they're going to be eligible for the level death benefit plan. If they answer yes to any application questions in part two, they're still eligible for graded. And if they answer yes to any application questions in part one, it's an automatic decline. So we also take a look at the Medical Information Bureau. We do a pharmaceutical check, and we also do phone interviews as okay. So let's talk about, and before I go on, I'm not sure if I mentioned that if you're not aware, if you've not sold our Living Promise final expense product, it's probably the most inexpensive final expense product on the market. And that's why we sell quite a bit. The underwriting is in some cases a little more stringent than you might see with other carriers. We do issue policies in 2 to 4 days, but the premiums are probably the lowest in the market, regardless of age or face. Okay, so let's talk about the Indexed Universal Life Express. Our Indexed Universal Life Express issue ages 18 to 75. We just raised that from age 70 about 3 months ago. So now we can go all the way up to age 75. It can be written in face amounts up to 300,000 up to age 50, 250,000 up to age 60, and 150,000 ages 61 and above. 2 risk classes, standard non-tobacco and standard tobacco. And we have actually 4 different indexing strategies. I'm going to focus on 3 today through the S&P 500. We've got the 100% participation rate, we've got a higher participation rate, and a lower participation rate. And I'll go a little bit more detail into Indexed Universal Life here in a minute. As far as the underwriting, it is exactly the same. If you're familiar with our Term Life Express simplified issue product, exact same underwriting as the Term Life Express. We take a look at the build chart, we get MIB information, and we do a pharmaceutical check regardless of age or face amount. At the younger ages 18 to 35, we do require a mandatory motor vehicle report. And at the older ages 61 and above, we do a mandatory lab history check. And what that is if they currently have a policy with Mutual of Omaha, whether it's long-term care or Medicare supplement or disability, we take a look at their claims history for those policies, and we use that within the underwriting as well for ages 61 and above. So we try to keep our IUL Express products simple. We have 4 crediting strategies. I'm going to focus on the 3 crediting strategies today that we have through the S&P 500 index. So if you're not familiar with Indexed Universal Life and how it works, Indexed Universal Life is a permanent life insurance solution. If you're familiar with whole life, the way whole life works is it builds up cash value based on a certain interest rate or rate of return that the company sets, whether that's 2%, 3%, 4%, whatever it is. Each year, the insured will pay their premium, and part of that premium will go to the cash accumulation value and will be credited at 2%, 3%, 4%, whatever the company says each and every year. That's a whole life policy. So IUL is very similar to that. You've got your cash surrender value, and that's being built up not by what the company sets, but it's based on the S&P 500 index. So just a simple example is if the S&P 500 were to go up 20%, in theory, we would credit the client's policy with 20% for that year. But the one thing about indexed universal life that makes it so popular is the insured is able to participate in the gains of the S&P 500 with their cash value. But if the S&P 500 goes down in any given year, they're not punished for that. In other words, indexed universal life policies have, in some instances, an unlimited upside with zero downside. There's a zero floor. So if the S&P 500 goes down 10 or 20% in a given year, we will not ding them 10 or 20%. They will just not earn anything. It'll be a 0% floor. And so that's what we're talking about here when we talk about 100% participation, and 100% cap. So the 100% participation plan, what that means is that if the S&P 500 goes up 10% in a given year, in theory, we're going to credit them 10%, but we put a cap of 9.25% on what they can get. The reason for that is because if the S&P 500 goes down in a given year, they're not going to lose money. They're going to have a zero floor. So that's why we put a cap on this. So in this case, if the S&P 500 goes up 5% in a given year, we're going to credit them 5%. If it goes up 9.25% in a year, we're going to credit them 9.25. If it goes up 30%, we're still going to credit them 9.25. Hopefully that makes sense. So the next strategy is a higher participation with a lower cap. And in this instance, if the S&P 500 were to go up by, say, 1%, we would credit their account with 1.4 or 140% of that. If it goes up 10%, in theory, we would credit them 14%, but we put a cap of 6.5. So the most they can get in any given year is 6.5%. And then the third strategy is a lower participation rate with no cap. So in this case, if the S&P 500 would go up by, say, 10%, we would credit their account at 45% of that, or 4.5%. If it goes up by 20% in a given year, we're going to credit their account with 9% because there's no cap. If it goes up by 40% in a given year, we're going to credit their account with 18% because, again, there's no cap. So hopefully that helps you understand a little bit more how that works. I will tell you that 95% or more of the cases that we write use this 100% participation strategy because it's just so easy to explain. You're credited with whatever the S&P 500 earns that year with a 9.25% cap and a 0% floor, okay? So we have the same living benefits riders included in the IUL Express that we do with the Living Promise product as well. We have the terminal illness rider included, and the chronic and critical illness riders are included as well. We also include a waiver of surrender charges for partial withdrawals. We have a guaranteed insurability rider included in this policy. So at certain events and ages of the insured's lifetime, they can increase their death benefit without evidence of insurability. And we also have a lapse guard rider built in to ensure that the policy does not lapse if the insured is taking loans or distributions from the policy. We also have cost riders that can be added. Of course, the accidental death benefit rider can be added. Disability continuation of plan premium rider can be added. Since an IUL policy is a flexible premium type of permanent policy, they can add that continuation of plan premium rider. And if they are disabled, we will waive the full plan premium rider for their period of disability. Or they can choose just a simple disability waiver premium policy charges rider. What that does is if they're disabled, we will waive the internal policy charges of the policy, but we will not waive anything else. So what that will do is basically keep the policy in force while they're disabled. And then we'll also offer a dependent children's rider at an additional cost as well. So the IUL Express Basics, as I explained, it's a permanent life insurance solution. Cash value is built up based on the returns of the S&P 500. It offers simplified underwriting. Our product, the IUL Express product, is the only indexed universal life product on the market that offers simplified express underwriting. There's no other product on the market like this. So in addition to the death benefit, of course, the policy also has potential to accumulate that cash value, and it's credited, as I said, based on the return of the S&P 500. And that cash value can actually help to extend the policy's death benefit, or they can use that to actually stop paying premiums on the policy and extend the death benefit that way as well. So the value adds of the IUL Express, if you use the simple premium, the guaranteed coverage the coverage is guaranteed for 20 years or to age 80, whichever comes first. You have the ability to have coverage up to age 120. Built-in features, as I mentioned, including chronic, critical, and terminal illness. Competitive cash values based on the S&P 500, and the exact same underwriting as the Term Life Express. I mentioned the Easy Solve premium. So the Easy Solve premium is, first of all, the premium that guarantees the death benefit for 20 years or to age 80. But more than that, it is the premium that will carry that death benefit all the way to age 120 at an average rate of return of 5.9%. Now that 5.9%, we're not talking about some pie in the sky rate of return. That 5.9% is the average rate of return for 25-year rolling averages over the last 65 years. So basically, in a nutshell, the S&P 500 is averaged right around 5.9% over the last 65 years. So we're not talking about something that's unachievable. So if the insured earns 5.9% on an annual basis, that Easy Solve premium will carry that death benefit all the way to age 120. Okay. So let's take a look at a comparison between our Living Promise product and the IUL Express. So simple Living Promise, age 60, standard non-tobacco, $50,000 death benefit. You can see the monthly premium there is $205, almost $206, almost $2,500 a year. That's the first option, sell a Living Promise. So let's take a look at the IULE compared to that. Same male age 60, standard non-tobacco, $50,000 death benefit. If we use that IULE Easy Solve premium, which I mentioned is guarantees the death benefit to age 80 or for 20 years, and carries the death benefit all the way to age 120 at a 5.9% return, you can see that the premium is quite a bit less. In fact, it's $925 less a year, or over 20 years, you're saving the client almost $19,000 in premium with that IULE Easy Solve premium. If we take a look at some hypothetical rate of returns in the future, let's say that the insured doesn't earn that 5.9% interest every year. In fact, they earn 3%, which is an extremely conservative rate of return for an IUL policy. If they just earn 3%, that policy will carry all the way to age 93. If they earn 4%, it will carry all the way to age 96. And if they earn just 4.5% rate of interest, the policy will carry all the way to age 100. And again, we're talking about very conservative rates of return here compared to the average 5.9 rate of return in the S&P 500. So you're saving the client almost $19,000 over 20 years, and that policy is carrying to age 100 at a low 4.5% rate of return. So option 3, what if we use the Living Promise premium and buy a greater death benefit with the IULE? So remember, for $50,000 of coverage, it would cost the insured almost $206 a month to get that coverage. If we use that same $206 a month for the IULE, the client can get a death benefit of $70,000. Again, that $70,000 is guaranteed to age 80. And we can actually do a 20-pay premium, stop paying premiums in 20 years, and that death benefit will carry, the $70,000 death benefit will carry to age 120 at that average 5.9% rate of return. If we continue paying premiums throughout the life of the policy and the insured earns only 3% on an annual basis through the S&P 500, the policy will carry all the way to age 120. And if they only earn 2% for that entire period, the policy will carry all the way to age 97. Fourth option is, what if we use the living promise premium for the same $50,000 benefit on the IULE? Well, first of all, we're not able to do that because indexed universal life has guideline premiums. You can only put so much money into the indexed universal life at a given death benefit. Otherwise, the policy becomes a modified endowment and it's not considered life insurance any longer. So the most that we can put into the IUL Express for a $50,000 death benefit is $165 a month. If we do that, we're still saving the client $10,000 in premium over 20 years. And at 20 years, the insured will have $189,000 cash surrender value, and that death benefit will have risen to $191,000 by age 100. So as that cash value continues to grow within the IULE, the death benefit has to grow as well to keep that corridor in there so that it's still life insurance. And you can see that at age 100, instead of $50,000 coverage, they'll have $191,000 of coverage. In this case, that death benefit is guaranteed to age 81. If we do a full pay IULE, continuous pay all the way through, the death benefit carries to age 120 at a low 2% rate of return at this $165 a month premium. If we stop paying premiums after 20 years, the insured's death benefit will carry all the way to age 120 at a low 4.25% rate of return. And at age 100, the insured will have $65,000 of cash surrender value in that policy. So you can see how flexible the IULE is compared to the Living Promise Final Expense. We love the Final Expense product. It's a great product for us. Sell it all you can. But what we're trying to do here is give you and your clients an alternative to give them maybe more death benefit or the opportunity to maybe stop paying premiums in the future. And it just allows the client more flexibility than they have with the Living Promise Final Expense product. It has that 20-year built-in guarantee. They can purchase the same death benefit with a lower premium. They can purchase a higher death benefit with the same premium. They get much higher cash accumulation value, provide short pay opportunities so they can stop paying premiums at some point in the future. And it gives them the possibility of higher death benefit as that cash accumulation value grows throughout the years. We've got some great IUL Express training videos and marketing materials. If you go to mutualofomaha.com/simple, you can see all these different brochures and flyers that we have for the IUL Express. We've got a couple great training videos that not only talk about our own IUL Express, but talk about how IUL in general works. Just a couple great videos for you to, if you're not selling IUL now, it helps you better understand how IUL works. Then we, like I said, mutualofomaha.com/simple. There's no login required to get on that site. Marketing materials, as I mentioned, there's product training, new agent resources, and contact information all on that. So if you don't do anything else today, at least go out to mutualofomaha.com/simple and take a look at all the great materials. And then obviously we have mobile quotes. So on your phone, you can quote all of our simplified issue life products, including the Term Life Express. It shows here that we do have a 30-year return of premium feature on our Term Life Express. And if they don't want the return of premium feature, they can actually get a reduced paid up life insurance policy, never have to pay another premium. So it's got a lot of great information. You can quote any of our simplified issue life products in less than 30 seconds, including the IUL Express. So last, I wanted to talk about what we call our 4 Quarters Club. It's our agent cash incentive program. We used to do an annual trip, but the reason we don't do that any longer is we would have to set a limit on the number of qualifiers, maybe 70 or 80 qualifiers, yet we would have 120, 130, 140 agents that actually qualified based on the amount of premium that they wrote. So we had to tell 50 or 60 qualifiers that you don't qualify for the trip because we have a limited number of spaces on the trip. So what we decided to do is change to a cash bonus program for the agents rather than the sales trips. The way this works is if you're able to place $25,000 of premium with all of our simplified issue products in any given quarter, we will pay you a bonus of 10%. So the 4th quarter has already started. We're already a month into that, so it might be a little difficult if you haven't already gotten started to hit that 25,000. But we're going to do this again in January of 2024. But it's each 3-month period are the qualification periods. So if you place $25,000 in a given month, we're going to send you a check for $2,500. If you place $50,000 in a given month, we're going to send you a check for an additional $5,000. The one caveat is you do need to be hitting the persistency and placement numbers. Placement needs to be 70% or better. Persistency needs to be at least 70% or better, depending on how long you've been appointed with the company. And again, these are all the products that are included, dollar for dollar for production credits, IUL Express, Term Life Express, Living Promise, Children's Whole Life, Guaranteed Advantage, and our full Critical Advantage portfolio as well. Okay, so I appreciate your time today. I hope you all found the presentation informative, and if anybody has any questions, I'll take those now.
Perfect. Yeah, we do have one question, Dave. Why would Living Promise be offered over IUL if it has guaranteed death benefit and can be funded to age 120 for less than Living Promise?
Well, the Living Promise product is basically a whole life product that's guaranteed to endow at age 100. So for those who now the IULE is only the death benefit is only guaranteed to age 80 or for 20 years. So that's probably the biggest reason, is a client might think, I just don't want to take a chance. I just want to have peace of mind to know that I've got coverage all the way to age 100, and if I don't die by age 100, the policy will endow and I'll get the full death benefit. On the IUL Express, yes, it is a lot less expensive, but it's only guaranteed for 20 years or to age 80. Now, the chances of it running to age 100 or even age 120 are very good because, as I mentioned, we're using very conservative rates of return. 5.9% is the average rate of return of the S&P 500 over the last 65 years, and that's what we're using as a illustrated rate. In a lot of cases, over 20 years, they're going to see higher than that. Even if they see lower than that, like 3% or 4% or 4.5%, as I showed in those examples, the policy is still going to carry, in a lot of cases, up to age 100 and beyond. I don't know if that helps answer the question.
All right, yeah, we do have one more question. Can you please explain the 20-year guarantee?
Okay, the 20-year guarantee, if you use the Easy Solve premium, again, the Easy Solve premium is the premium that will carry the death benefit of the policy all the way to age 120 if the insured earns an average of 5.9% rate of return over the life of the product. If they don't, let's say the S&P 500 for the next 20 years is negative, the death benefit is still guaranteed for 20 years or to age 80. That's what I mean. That's what we mean by the death benefit guarantee. So if they're using that Easy Solve premium or a premium that's higher than the Easy Solve premium, they are guaranteed to have that death benefit for at least 20 years or to age 80, regardless of what happens in the S&P 500.
All right, thank you there. And we have one more. Do they have the option to increase their premium if the funding doesn't seem to be able to carry the policy to 100?
Yes, it's a fully flexible premium policy. All indexed universal life's policies are flexible premiums, so they can put, as the one example I gave, you can put as much into it as you want up to the guideline premiums. In fact, in the example that I gave, we couldn't even put the amount of premium of the final expense into a $50,000 IULE because it wouldn't allow that much. We could only put in like 165 rather than the $200. So yeah, totally flexible. We give reports every year so you can see where your cash value at. You can do re-illustrations to see how long it's going to run based on what the returns were last year or the last 5 years. You can adjust that premium however you like.
All right, well, that looks like all the questions that we have for today. Thank you everyone for joining us today, and thank you, Dave, for the great information. Please give us a call or send us an email if you have any additional questions or if you'd like to see an illustration. Thanks again, everyone, and have a great day.
All right, thanks.